Eva says, sorry, I couldn't make it in time for today's showing. hope hope we can see more houses at the spring, into spring. Yes, more home will come. That's normally the time every seller waits to put their home on the market because people are getting out of school. The weather's nice. People are wearing shorts. Like everybody's just out. So springtime will have more inventory, but with that, it's gonna be more buyers too. Okay, so be prepared. If you're waiting until spring, most likely to pull the trigger, then you're gonna have way more competition than right now. Chai says, "Hi, Chia and fans. What's up, Chai? I'm gonna actually share a video that you shared on your newsfeed the other day, Chai. Towards the end, I want to share it with everybody. It's pretty nuts. I thought it was a pretty good video, so I'm gonna share it real quick. It wasn't your video, but it was a video from another realtor, and you shared it in one of the groups, so I'm gonna share it too tonight." Eva says, "Oh, this is good." Eva says, "What is happening with homes that are coming back into the market? It was listed, it's gone, and it comes back again. Should we bother looking at those homes?" Good question, Eva. Those homes are called pending homes. I would say because inventory is so low, if the seller is allowing for backup and they are allowing showing still for those backup offers, those pending homes, go and look at it. Because it might come back on the market,
Oh yeah.
but like kind of caution yourself when you're targeting those type of homes, because you need to ask yourself, why did it come back on the market? Was it
Right.
overpriced? Is it haunted? Does it need a lot of work? Like, is the neighborhood really bad? Like, why did it come back on the market? And sometimes it might not be none of those. It might be because the buyer was shady. The buyer that submitted an offer on that home was shady. He or she submitted 20 offers on 20 different homes, and the one that they liked came and accepted theirs, so they canceled all 19 offers. I've seen that happen. Not like red-handed, but then like I've witnessed that happening, and a lot of times investors do that. But right now, because the market is so crazy, a lot of buyers are doing that because they feel like if they have to wait like up to 72 hours to hear a response back from their offer, then they're missing out on other homes that they could have submitted an offer on. So
Right.
that's what's going on right now. So it might not be nothing wrong with it, but always double check that address with the agent so that way they can verify why it came back on the market
Well,
before. Yeah.
sorry to interject,
No, go
Chia.
ahead.
Lender here speaking, because I have to have played Captain Save a Loan several times. A lot of times too. Don't forget, there's a lot of lenders out there that do not do due diligence when they're trying to pre-qualify you. They're just trying to win your business, and it's just a transaction, pounding it out. If you're getting a pre-approval in 5 minutes, I definitely absolutely question that if they're analyzing your whole entire situation thoroughly. And that's the thing too. Numbers are numbers. It's just facts. There's no way that you can really truly argue with that. And if you've seen the other shows that we've actually done a savings plan, if you get in and then you do it on your own or you have somebody share it with you, and then you see, hey, I'm actually going to be negative because my income really truly can't support this, that could be the case too. Okay. And sometimes if they don't do their due diligence at the umpteenth hour, they find out all this stuff. There's a lot of lenders, a lot of loan officers out there that their only job really is to take the application. They send everything else into their operations team again at the 11th hour and come find out you truly don't qualify. I've seen that several times.
Yep.
Some of them I do try to save just because we do have other programs that some of the banks don't have. And sometimes I'm looking at it and I was like, how did this even get past this portion, this, phase? So that's
Yep.
another reason.
And you guys got to think of it like this too. For them, it's a business. So for them, it's a numbers game. If they're
Yeah.
running 1,000 applications for a loan approval, a percentage of those thousands of applications are going to get
Yep.
qualified.
They're going to stick.
And then also a percentage of that are not gonna qualify. For them,
Right.
they're okay with that because again, it's a profitable business and it's a business. It's nothing
Right.
personal. So that's why I always like to like say to all of my clients, get a second opinion. Like
Right.
even Lisa encourages that, like she does all these budget analysis for you, but then if another lender runs your scenario and is able to like give you a certain program that Lisa's not able to offer, Lisa will tell you, man, like
That's
go with
awesome.
that
Take it.
lender. That's
Go for it.
awesome. So like you're entitled to compare that as a consumer. So do it. Do
Yeah,
what you're entitled
absolutely.
to. So that way you know that it's not just one person's opinion on your approval. It's multiple opinions, and now you know for sure you are well qualified, and you're not just a number.
Right, right. And that's, you really want to truly know what your affordability is. And later on, when I'm pricing out this one of the down payment assistance programs, you'll see why it's so important for you to recognize what truly is a comfort zone for you. Because at the end of the day, that's your livelihood.
That's true. Okay, let me finish going down the comment and we'll go to the next topic. Eva says, we just started and we both already hate the buying process. Have the right expectation, Eva, and then
Yeah,
you will not lose. If you listen,
yeah,
if you watch our show and you listen to me and Lisa's advice, you're not gonna lose. You just gotta, have thick skin, play the
yeah,
game, and know what your options are. And just,
right,
you just gotta be mentally tough, especially in
right,
this season. Okay. And then you'll be good. Don't hate the process because we didn't even start anything yet. We've just only been looking.
right. So I hate the player, I hate the game.
We went to look at some Lennar homes just to compare with Woodside. Went in thinking I wasn't going to like it, but it actually ended up decent for a more affordable home. Yeah, like just because you go to a big name builder doesn't mean that they're gonna have the best pricing or the best layout to your preference. So again, options. Go out there, look at your options, see what you could get yourself into, and then compare and narrow it down. When you start your search as a first-time home buyer, you want to see what your options are. And then from there, your goal is to narrow that search so that way you could just only pay attention to the ones that you prefer. And then from there, it's just all a matter of pulling the trigger on the one you decide to fall in love with. Chai says, I know which one it is. Yep, it's going to be that one, Chai. You
Yeah.
shared it. I saw it. I'm going to share it tonight. Yeah, says, could it be appraisal issues? Yeah, that's true.
Oh, for
Like
sure. Yes.
homes coming back on the market, it could be appraisals. That could for sure be the reason. And I'm telling a lot of buyers right now, if you're overbidding on a home right now, which a lot of buyers are doing, be prepared to pay for the gap. For example, if the price that for the home is 500K, but you bid 550K, the gap is 50,000. If it appraised at 500K, sellers are gonna wonder how you're gonna pay me the difference, buyer.
Yeah.
I mean, I chose your offer over everybody else. How are you gonna pay me the $50,000 difference?
Yeah.
So that's something you need to consider. Okay,
Yeah. And
so
that's the
that is
whole thing
definitely
about it going back in the market. If you haven't prepared yourself to have those types of cushions, that absolutely could happen.
yeah.
The other thing that's
You
the other thing that's happening is that some people unfortunately had stretched it so far to the max that now with the interest rate changing a whole percentage in up, they no longer qualify.
Yeah. And that's why me and Lisa are always preaching this. If you're qualified for 500K max, don't look at homes at 500K in this market
Hmm.
unless that home that is priced for 500K has been on the market for 30 days or more. That means something's
Yeah.
wrong with the home. Then
That
you
means
can
it's
look at that
haunted.
home. That means haunted. I'm just playing. But if you are looking at a home that every other buyer is looking at, and it's only been on the market for 2 days, 3 days, 7 days, and it's
Right.
exactly priced at 500K, but your max approval is at 500K, you're already going to go in with the wrong expectation. You're going to stun yourself. because every buyer that's looking at it's probably pre-approved at 550K. So now they have that $50,000 gap of buffer to compete. Does that make sense?
Yeah.
That's why me and Lisa always preach that. It's not because we're trying to get you to overbid. It's because we know that that's the game right now. And we know that you're going to look at the same home every buyer is going to be looking at that just came on the market. And therefore, you have to set the expectations right with yourself so that when you don't lose mentally and you don't lose in the game. You're going in and you're preparing yourself. Okay, 500K is my max. I'm only looking at homes at 450K or under. So that way, if I do bid on a home I like, I have up to $50,000 to bid. And then you don't stretch yourself thin, like what Lisa says, because your budget allows that buffer.
Yeah. Yep.
Worst case scenario, it allows that buffer.
Yep. Yep.
Ching says, what are rates right now? Going in with 740 plus. I don't know, Lisa.
How much are you putting down, Ching? So let's just assume that you're putting in, at least 5%, right? You have excellent credit, everything else is good and everything like that. Let's just assume that the interest rate right now is already at 4%, you guys. I'm assuming everything is perfect. So it's
5%
tough because
down.
5% and up. Okay. The more you put down, let's just say if you put 25% down, then possibly it could be at a 3.875.
That's conventional?
Correct. That is a conventional loan. FHA loans right now are still at 3.625. Okay. Keep in mind, in November, they're still at 2.5. Okay.
What a
Don't
huge
be
gap.
too scared about that though, because we're still in a very, very low interest rate. They were supposed to raise it in 2020, but COVID happened and they couldn't do that because they're already losing small businesses and everything like that. They didn't want to collapse this side. So they cushion it for as long as they possibly could. But this is the reason why some of the banks may be pulling out too. Because if there's not enough people investing in mortgage bonds, if the interest rates continue to stay low and they're not investing in that, there's not enough money to go around to lend out. So that's the catch-22.
Mm-hmm. There you go. Are homes projected to start coming down in 5 years? Maybe we might look at starting an investment home and then buy a dream home later. That is not a bad idea. Eva, if you remember what I said to you guys the other day? I said that you guys got to think about your long-term goal and short-term, right? The purchase on your property right now, you gotta, depending on what your long-term and short-term goal is for that purchase, should determine what type of home you should be buying. So everybody's lost. Everybody's like, what? You didn't say that the other day. I did. I said it to Eva. Only Eva though. So Eva knows what I'm talking about. But yeah, long-term or short-term goal is gonna determine what type of home you're buying today. We could talk more about that later, Eva. But yeah, to answer your question about 5 years, I don't have a crystal ball, so I don't know if prices are gonna start coming down. If everything is the way it is from this chart right here, then I'd say no, it's gonna keep going up. I know that's crazy. We're talking about 5 years here, but I'm just saying it's really hard for anybody to predict that far out without looking at data. And that's why I like showing this data to all you guys, because you guys can decide that information for yourself. Oh shoot, inventory is still low, so that means the market is gonna keep going up. Duh, so this is really the purpose of these market updates, is for you guys to be informed, so that way you guys can decide for yourself what the market is gonna do. And for me, I feel like the furthest I could probably project out is like a year out, and from right now, I think it's gonna keep going up.
Right, a year out. We don't have a crystal ball or anything like that, and it would be awesome that we did, and then we can all make it happen. But guys, just look at what's going on. This is just food for thought, okay? And what's going on in our economy. What happened in COVID is that a lot of companies went virtual, right? You also have to consider there's a lot of businesses right now that are losing so many employees. So they're going to be looking at us, all those business owners, all the store owners, mom and pop owners, and everything like that. They lose their business. They're going to be forced to sell their home. People who have not really done the monthly budget and everything like that and are living truly paycheck for paycheck while they're trying to get a home and something happens, their job, which they thought was super stable, now is being outsourced. Outsourcing employment across the board in most companies is a huge, huge thing right now because they don't have to worry about labor laws. They don't have to worry about a facility. And when they do that, they save so much money. So until the tax bracket changes for us to outsource workers, all those people that are in that position, it is very unfortunate. But you know, I'm hoping that they'll see that and they'll have some sort of a plan, a career path that they can go migrate into before that does happen. I mean, you guys already saw the Amazon grocery stores where you go in, you go out. There's no cashiers
That's
that's
gonna be
needed
so
anymore.
cool.
It is cool, but look at how many people are going to lose their job, guys. Okay. And on top of that, admin
Mm-hmm.
people. Okay. Can that be done outsourced? Yes, absolutely, it can be. If you are working from home right now, okay, which is a wonderful opportunity, but if you're working from home right now, somebody also could do your job somewhere else and the company pays them a tenth of what they're paying you. So those things are to consider. And if that is the case, and you know, more and more companies are doing that, there could be a collapse, guys.
Okay, last comment right here, and then we're gonna go on to the next topic. Okay, sorry guys, but I will resume this. Mark says, "Can you use the equity of a current home to buy another house, not pulling money from the market?"
Not pulling money from a market.
I think he's talking about not a cash out refinance, but just using the
I'm
current equity. I'm thinking
yeah,
HELOC.
I'm thinking that you're thinking that too. Hi, Mark. Um, yes, you absolutely can, but your debt to income ratio has to also apply. Okay, home equity lines of credit, although my bank doesn't do it, and most mortgage banks don't do it. Okay, it's like a big credit card. The more equity that you have in your house, the more you can take out, and you can utilize it to do a number of things the same way that you would use a credit card, and you could absolutely use it to purchase another home.
People do it all the time. That's why they say that
Yeah,
rentals are like ATM machines.
it really is. It really is.
All right, there you go. All right, let's go on to the next topic, which is so we we already know, right, that the market is crazy right now, right? And on top of that, rates are going up. And on top of that, some banks are rejecting applications from what we're hearing. So here's how that looks, okay? On a scenario. First time a home buyer goes to a lender like Lisa and gets qualified, well qualified, over 700 plus credit score, great interest rate, purchase price is good. They lock in a house, submit an offer, and then next thing you know, the bank decides to pull the application and says, "We decided not to give you the loan anymore." This buyer really removed all their contingencies, and now the bank's not going to give them money. We've been hearing about this lately, about banks doing this. Lisa, you're a lender right now, so it's in your industry.
Yeah.
What do you see? Why are banks doing that?
To pulling out,
Yeah, like deciding on
pulling
the last
application.
minute they're going to be rejecting that, they're going to be no longer going to be funding that deal anymore.
So just think of the bank, okay, with this huge piggy bank, okay? They keep lending out money, they keep lending out money and everything like that. And eventually, if they're not getting anything in, there's not enough to pump out. Okay, if they're not buying if they're not buying money at the time that they're supposed to be buying the money, they're seeing it that it's way too risky, so they're going to cherry pick, and they're like, okay, we're going to continue to do loans that we know for sure is going to make us money as soon as possible. Down payment assistance programs, people with lower down payments, it may take a little bit longer for them to recoup that cost. So if they're not specialized in that, okay, if the banks truly are not specialized in those types of loans, that absolutely may happen. The other thing is because people are getting more and more conservative. And when I say there's not enough money a pool, when they lend it out, most banks will sell that loan to the investors. The investors are, okay, cool. Now, here's what the back end is. The underwriter who approves the loan, they're also responsible to making sure that the investor will actually buy the loan. Okay? And they check with the investor before they even fund the loan. And the investor says, "Now I'm pulling out. It's too risky. I don't want to do it." So if
Is
they
it
say that, well, then unfortunately, that is what it is.
now? Why would an investor decide to back out? Like they really committed to starting the file initially, and that's why the buyers was able to be confident enough to submit an offer on a home. Why will all of a sudden an investor decide to back out? Can it be because they saw that this buyer locked in a rate when it was still 3.125, but Feds raised the rate and now it's at 3.7. Shoot, I'm leaving money on the table.
That could absolutely be it. I mean, there's so many combinations, you guys. There's so many combinations. And if the lender didn't really analyze the potential market trend and they don't have that set reserves for themselves to cater to a changing market, they may not have enough investor pools to actually get everything that's needed. Again, I'm very grateful that I haven't experienced it myself, but because I'm on several mortgage forums and I'm seeing people are getting really worried. The other thing, too, guys, is that there's a huge amount of layoffs that's going on, especially with the bigger banks, the bigger online banks. And it's like for the bank, it's great to have your loan officers. That's our sales team to try to bring more business in. And then you have the operations team. Now you cut off the legs, the arms are going to have a really hard time maneuvering around because we've got to, run as a whole entire body. Okay. So it's going to be much, much harder when there's not enough of the operations people involved. And it's kind of like okay, do we, don't we, do we, don't we? I mean, I've seen so many processors, so many underwriters, so many funders, so many closers. There's so many legs, there's so many movements, there's so many pieces, and there's so many people behind your loan, not just your loan officer. Your loan officer is just your advocate to make sure that you got everything ready so that everybody else who your loan officer is passing the baton to on their team is going to be able to see your story because they don't know you. Nobody else talks to you except for your advocate, your loan officer. So along the line, if it's not packaged properly, if all the details aren't laid out, hey, this is the person's overtime. Hey, this person jumped this job and everything like that. They now have overtime. But if you look at their past jobs, they also had overtime in there. We're going to go ahead and count that, for the last 2 years, yada, yada, yada. They get car allowance. They get this, okay? Their job is not to analyze really truly all that. Their job is just to look at all the red flags. It's like, nope, that doesn't match. That number doesn't match. So if all of that isn't going to sync up and you're losing people and now one person has to do 2-3 persons jobs because they can no longer afford a large operations team, you're going to see a lot more of that happening. This is very 2006.
So
And
what would you say to like a well-qualified buyer that's looking to buy their home for the first time right now? Should they be worried about this then?
yeah, go with a very reputable company.
What's considered a very reputable company though?
Honestly, don't go online. I mean, I know I'm gonna get. I know I'm gonna get a whole bunch of haters from those departments and everything like that. But for every person that we've interviewed, that we, who wants to join us, because they're also the ones, the call center lenders. Those loan officers are application takers. And then they take it and they bring it to everybody else. So they're losing their jobs, and they're coming to us, or they're coming to a larger mortgage lending bank and everything like that. And their training and everything else is very, very different. It's not that they're not good. It's just that the company hasn't given them the tools to really, truly analyze your information to make sure that it's thorough, to make sure that, hey, if option A doesn't work out, could you have a plan B? Right?
Mm.
And when I do the analysis, what I usually say, Chia, I'm going to give you the worst case scenario in the
Yeah.
event that the seller is not going to pay for anything, in the event that the appraisal is going to come back low, and Chia and I communicate. Okay, your loan officer and your realtor, they should be a team. If
Mm-hmm.
you're getting a realtor that you don't really know, but they want to do your business, which is a great thing. It's nothing wrong with that. And then you get another loan officer that also is somewhere else, not in the state that, um, because there's a lot of online banks that their loan officers are able to do all over the states. Now, every state has its own guidelines and has its own rules. So if they don't really know that and they're not familiar with that, that's where you're going to find yourself, unfortunately, in a situation.
So think of it like this, okay? If you're a savvy buyer, then you would already know what your situation is like. We're not saying a online lender or like one of these big marketing lender that you see a lot. I'm not gonna name anybody, but then like we're not saying don't use those type of lenders. We're just
Yeah.
saying if you're not a savvy buyer, you don't really understand the complexity of how everything works, then
Yeah.
you might need somebody that's more local or that's more willing to teach you through the process, hold your hand, and be willing to communicate everything with you. Because
Right.
if you're going with a different lender and you're not really a savvy buyer, they're going to use a lot of terminologies and verbiage that you're not going to understand, and you're just going to go in trusting them, but for them you're just a number.
Correct.
So because you didn't do your due diligence, they are just doing what they're being paid for, which is their role for that company. They might, like what Lisa said, they might not even be a loan officer. They might just be a team that's directing all the applications to a lender or to the brokerage that has a license. They might not necessarily be the one that's licensed that knows exactly what's going on. It's just that they
Right.
were trained to do one thing, and then another department is trained to do another thing.
Right.
So if you're not a savvy buyer, you don't understand the complexity of all of that, then go with somebody that's more local. That's
Right.
what Lisa's saying.
Right. When you go with somebody local, or at least in California, okay? I am licensed in 4 states, but I'm saying if you go with somebody, make sure that they actually know the income limitation, or the loan limitation for the county, the property taxes in the area, property taxes in Texas, and property taxes in California, and property tax in everywhere is totally different. Again, if you're going to go online with somebody that has access to everything, which is a wonderful thing, it's an all-in-one Encompass, it's a wonderful thing. But if they're calculating you at a property tax that's lower because they didn't realize that in California it's X, Y, and Z, that might get you in trouble. Now, here's the way that you can vet your loan officer. Did they check, besides the application, did they really pull a credit check? Some companies out there pull what's called a soft credit check. It is
Yeah.
not accurate. That is the reason why when you actually do a loan, you have to, all lenders have to do a full credit check. Okay. If they didn't check your actual income, if they only checked one pay stub, did not check your W-2s just to see if it's consistent, okay? Because the bank, the lenders, the guidelines does dictate, hey, what if you're making, if it looks like on your pay stub, it says right now your year-to-date income is $20,000, but last year's W-2 shows something way different. Either you got a raise, you got a new promotion, or you're only commission only, and you're getting your groove this year. They still have to calculate commission income, bonus income, overtime income, any variable type of income is seasoned in 2 years. Oh, but Lisa, I just started in 2020. So therefore, it hasn't accumulated, but really I make this much. Great. I would, I totally get it. I don't make up the rules, guys. This is the guidelines are the guidelines. There's certain things that can be pushed because it's very subjective. This one isn't. Okay. And if it wasn't calculated correctly, the reason why the guidelines dictate that in a variable income, that's exactly what it is. It's variable, which means if something turns in the economy, if they have to shut down, if casinos shut down, and you no longer get that income, which most dealers, most people who are waitresses, most people who work at nail salons who are dependent on tips and things like that happen, you can't calculate that income. So it has to be
Yep.
calculated at an average. Okay.
Yep. But all right, let's read some comments real quick. Okay, so Nia says my sellers just received an offer 20K over their asking price. We asked for an appraiser addendum saying that the buyer will cover the difference should it not appraise, and they sent that right away. Yeah, a lot of buyers are doing that right now because they're being they're knowing how the process is like right now. You know, they know that it's getting aggressive, and maybe that buyer that's willing to send that addendum to your seller, yeah, has been through a lot of those rough offers to where they got outbidden and enough was just enough, and they just wanted the process to be over with. So they're willing to do the addendum. And congratulations, by the way, on your accepted offer for your seller. That's always a plus. Chang says, always buy for the long term. That is true. Especially right now, right? With the prices being so high, you know, the market being so intense. Um, you gotta really buy for the long run, because if you're not buying for the long run, you're shooting yourself in the foot, and you're just gonna be burning cash, really. So look at your long-term goals for that purchase. If you can buy, then buy. Trying to predict the market is the wrong way to go at it. Okay. Okay. Marlene says, I would say that it's irresponsible on the bank side. They should be honest from the beginning and not be wishy-washy. Well, you
Oh
know,
yeah,
it's
absolutely.
that's true. It's just I don't it's I would you even say that it's necessarily the bank's fault or the investor?
No, it's the bank's fault. Okay, because you have to solidify that relationship with your investors. You have to know them. You have to build that relationship. Relationship is all how it's played out here. Okay, and the fact of the matter is, if they're not making their investors feel safe, that could be an issue too. Okay, and let's just say, for instance, if they have a trend of loans not performing, how is the investor going to trust them? Why did the investor pull out? He didn't just decide, okay, I'm going to pull out. I'm not going to want to make money. There is a reason.
Mm.
There's a reason for that. And there's certain banks that don't have investors. They actually keep their loan, which is fine. And they're looking at their business and they're saying, you know what? It costs us more money to do this loan and keep this client than it is for us to let this one go. It
Mm.
sucks, you guys. It absolutely sucks.
Can it be any buyer like FHA, conventional VA, or is there a certain demographic of buyers that are getting their loan apps pulled?
Gosh, that is a loaded question, Chia.
I just want everybody to
um,
know, you know, because it's because I
we're
think
not
it's good
supposed
to
to know
know.
that. We're not supposed to know that, right? We're not supposed to know that. But realistically, at the end of the day, they're going to see which loans are more risky. So if you're doing a loan and you're maxed out in your debt to income ratio and everything like that, and you're putting minimum down, those are the ones that are going to probably go first. Down payment assistance program was on a halt because they were riskier, you guys. Okay. So even though Chi and I love to work with first time buyers, and we've done down payment assistance programs smoothly, right? I caution on those types of programs because of situations like this. I'd rather position you for success and not set you up to fail. When you don't look at your numbers, your actual numbers, not what you qualify for, you're going to set yourself up to fail. And this is the reason why we coined the term house poor. You're pouring everything into your house. You're stressed out as heck. And at the end of the day, it's just a house, you guys. It's supposed to be your home. But if you're that stressed out about it, can you truly honestly say, this is home for me? When you come home, are you stressed out? When you come home, it's your zen.
Yeah, that's important. Don't
Mm-hmm.
change your life. If when you're buying a home, you got to ask yourself, is your lifestyle going to change? Are you okay with that change?
Yeah.
If you're not, then you might need to change some things around. Are you going to be okay with eating ramen noodles for a while? Are you going to be okay with not going on that extra date with your spouse? Are you going to be okay with all of that? And me and Lisa cannot decide that for anyone.
Yeah. We can only
So,
guide you. Okay. We
mhm,
can only guide you. And I personally think it's very important to do that monthly uh, uh, budget planning so that you can
very,
really truly see your real numbers. And not very many people do it. In fact, I don't know anybody else that does do it, but I did it for myself. And because I thought it was so useful for myself, I use it for my clients because you guys become our friends, you guys become our family, and we protect you guys as if that is the case.
mhm. So, speaking of down payment assistance, there
Mm-hmm.
are a lot of grants that come out every year. Every
Mm-hmm.
time, there's always going to be a new grant program out there that's targeting first-time home buyers, that's incentivizing first-time home buyers to buy. And
Right.
I shared a flyer with Lisa a few weeks ago, and it was regarding some grants, like up to $50,000 worth of grant from like some lenders for first time home buyers. But
So
there's a catch with a lot of these grants that I want you guys to all know about before you guys even consider if it's something good for you or not. And
let me
hopefully Lisa can share about that.
Yeah. So let's be very clear about it. Okay. Down payment assistance program, they're not all grants. Okay, guys. And
Mhm.
certain grants have a caveat where if it's you have to be there for 3 years, you have to be a service worker, it has to be a particular neighborhood. There's only a certain amount of income that you can qualify for it. There's a lot out there. So we're going to only narrow down on one of the ones in Sacramento here called the Neighbor Works, which is a great program. Okay. So I'm going to share the screen a little bit.
Please do.
Will do.
I promise you guys I will answer all the comments before we end tonight, okay? You guys got
Okay.
a lot of good questions.
Let me know if this is big enough for you guys to see.
I see it. It's big.
Okay. Okay. So I'm going to read this off to you guys real quickly. Okay. This is the Cal Home Buyers Assistance Program. This is specifically for a particular neighborhood where they're trying to build that neighborhood and community up. Okay. And the loan highlights the second mortgage deferred. Second mortgage. It is not free money, guys. It is deferred, which means you do not have to pay on a monthly basis, but it still accrues interest. This is the interest of what it is. There's no monthly payment for it, which makes it nice. Down payment assistance up to, you do not get $50,000, guys. It's up to. So depending on your situation and what program it is, right, it can go up to, which is funny because I did the math and I was like, I don't even know how you can go up there, but okay, let's assume that that's the case.
It's a very
Okay.
big house.
Right. So here's the eligibility. First-time home buyer must not have had ownership for the last 3 years. Must be owner occupied. Must have a credit of 640 and above and no unpaid collections. Okay. Applicants must complete a virtual 8-hour home buying education, easy peasy. That one's an easy one. The cost of the class will actually be refunded, but it's really not that much. We're talking about $50 to $100. These are the household gross income that must abide by. Okay, so if you're one person buying a house, your annual income cannot exceed $50,750. This one's for two, 58,000, 3, 65,000, 250, and so on and so forth, you guys. Okay. These are the types of properties that it is eligible for. Okay. A pest inspection will be required with Section 1 clearance. Okay. Chia, is this an issue? Is this possibly could be an issue?
Yes,
when you're
it
buying a home?
is.
You see, there's a
The
lot
reason,
of
let me share why. Let me share why it's gonna be an issue. Right now, because it's so competitive, you're competing against 20 plus buyers on one house. Let's just say minimum. Do you think that the seller's gonna want to choose a offer that is requiring them to already do work on their home right off the gate? It's gonna be tough. I'm not saying that there won't be, but a lot of times if a seller has 20 plus offers and one offer says I'm removing all contingency, I'll buy the home as is, and then the second offer says I'll give you asking price, but you have to do the repairs of Section 1. Which one do you think a seller is most likely going to choose? It sucks. It's sad, but that is the nature of the game right now, unfortunately. So that's why a lot of these home buying programs, these down payment assistance program, you gotta fully understand that. You gotta go in, if you're planning on utilizing these programs, you gotta go in with the right expectations. You gotta go in knowing, shoot, the house that is gonna have a lot of competition may not work for this program, because
right.
So that's one thing to think about.
Let's finish reading this, guys. I mean, this is a Sacramento program, so it has to be in Sacramento County, but the maximum purchase price is only $525. Okay, and from Chia's average, that's like a little bit above the average pricing already. So let's share how that number looks like. Okay, so I priced this out for you guys: number of people, maximum household income, maximum monthly income. Chia, is this big enough for the audience to see?
Yep.
Okay, awesome. So based on this, this is your debt to income ratio. The maximum purchasing power you have if you have no other debt whatsoever, and the interest rate for these programs are going to be a little bit higher. Your purchasing power is $285, you guys.
Oh my gosh.
I know. And your monthly payment is $1,891.
If you guys are buying in Sacramento, you guys are looking to get a 4-bedroom, 2-bath in a decent area, you can't even get that for $285. I'm sorry.
So that's the income limitation per this flyer. Okay, look at that, black and white. We can't change that. Okay, if you have 2 household income holders, you can go up to $325. Okay, if you have 3 people, you, spouse, mom, qualifying, you can go up to $370. But all your income combined cannot be more than $65,250. So you see where I'm saying it exists. But does it? It's helpful, but it is a very small pool of people that it really truly is catered to. Because even with 4 people household income, maximum is 405, because the debt to income ratio allowed is typically 45% and below. For 5 people, you got 5 people going on right now. Okay, I mean, you, your spouse, your 2 kids, and a parent.
Okay, Lisa, before you go on. I don't want you guys to think that we're bashing on this program. We're not. This program is so awesome if it works for you. But just like anything in life, sometimes when it's too good to be true, it is too good to be true, because everybody's situation is different. You know, like I know people right now that are looking for a minimum 4-bedroom, 2-bath, and something like this is not going to work for them because of the income restrictions. What this program is good for, let's flip it, okay? I think this program is great for single individuals that are looking to buy a house that is not outside their means. Maybe a condo, maybe a 1 or 2 bedroom house. I think this program is great for that, because you know why? You don't need to have your income be too high, and within the price point qualification that Lisa just mentioned right there, you can still find a decent condo. And you
Right.
guys might think, but I don't want a condo. Then again, this program's not for you because
Exactly.
prices are so high right now. So it's going to be limited. And the reason why I say condo too is because that Section 1 clearance, condos are great because they have HOAs that take care of all of that. So
Right.
then you won't be having an issue with competition on a condo because a seller is not going to need to address it.
Right.
HOA is. And so this program is great for that. But for anything other than that, it's going to be hard. But again, it's a case by case scenario. So you have to bring this program up if you're going to utilize it to your agent and see if the situation is going to match your scenario. Because if it doesn't, then it doesn't. The numbers don't lie, and you can't sugarcoat it any other way, unfortunately.
That's exactly it. I mean, she said it completely right. We're not bashing on the program, you guys. The program actually was really, really great. Probably, I would say about 10 years ago. But the
Oh my
income limitations
gosh.
and everything like
Yes.
that has not caught up to what the true market is right now, is what we're
Yes.
saying. In a lot of down payment assistance program, they're nonprofit. And again, love that. Love that idea. I would love to build a down payment assistance program that actually makes sense later on in my career. But at this time, a lot of these may not make sense for you. Okay. And if your income is low and you're confined to not buying, your buying power cannot exceed a certain amount and everything like that, that's where your catch is. Where does that fit in? Keep in mind, these neighborhoods, because they want it to be up and coming, the home prices may be a lot less too, which is a wonderful thing. So if that does happen, that's great. The other caveat is a lot of these programs that are lifting up the community, it's a pay it forward type of program, which is a pro and a con. Okay. Pro,
Mhm.
because you get to go into that, you get to take advantage of it. But when you go sell, you also cannot sell it for the market value. You can only sell it for what the program increase allows you to do so that you can pay it forward and allow somebody else to buy it for a less value price. It's fair if you really think about it. It's really, really fair. Okay. But again, do your research on all of these programs before you really, really put your, offer in. And like Chia said, it's already a super competitive market. If you're not
Yep.
prepared to overbid, if you're not prepared to come in with closing costs, if you're not prepared to not have to do inspections and things like that and force the seller to have to do more, then it's going to be a little bit more difficult to win that offer. I'm not
Yep.
going to say that you can't. I'm just saying it's going to be a little bit more difficult.
It is going to be more difficult, and your agent is going to know what is best. If you chose your agent for a reason because you trust them, then they're going to tell you they're going to tell you the truth, and from there you're just going to have to decide whether you want to take their advice or not. That's really what we could say. But okay, so I want to share this video with all you guys, and then I can answer the remaining comments. um Eva, this is for you.
Oh, I'm
You
not
wanted.
sure of that.
Well, the reason why I'm referring to Eva is because earlier,
Yeah.
she said maybe if the prices do go down, and how is it gonna be like for the spring? Let me show you what spring's gonna be like.
Oh man.
The spring is gonna look like this.
What's it look like, guys? It looks like a flea market to me. A flea market to buy houses. That's not funny. It's sad.
This is in the Raleigh area over by North Carolina, and this home is under $300,000. Look at that guy. It's a flea market, like what Lisa says.
Mm-hmm.
Oh, they said there's no audio. Sorry, Eva. There's probably not audio, but that's what she's saying. She's showing her client a home that's priced under 300,000, and there's all these group of people out there waiting to go and look at the homes. And because there's so many cars, there's neighbors driving by saying, "Is there a party going on? Like, what's going on?" And so she's telling them it's not a party; it's a housing crisis. So this is what's gonna happen, and this did happen last year. Like we will go and look at homes, and there'll be lines of buyers outside the home because it was the only home that was available at the time. Like many buyers right now have a specific home that they want to buy, and eventually you're gonna come into contact with something like this, especially for the spring and summertime. This video was posted yesterday, 3 p.m. And then Chai shared it. And when Chai shared it, I saw it. I'm like, oh my God, that's crazy. Maybe I should share it with all you guys. Because it's not fake. This is what's going on right now. And the other day, somebody texted me saying, Chia, are we having like a inventory issue only in California, Sacramento? No.
Mm-mm,
This
mm-mm.
is in North Carolina and it's happening there. This is
It's happening
nationwide.
across the nation, everyone. It's
Yeah.
happening across the nation because a lot of people are selling. The ones who are selling in California, I mean, honestly, you guys, I'm considering it too. It's like the hot market is really really great right now. If I sell it, I can pretty much
Yeah.
buy a few
This,
houses in
yeah.
cash. So
thanks thanks to Q Monique Edwards for sharing this video. She's in North Carolina. If you guys are buying a home over there, contact her. Say, hey, we saw your video on ChiaTalks.
yep,
But yeah, I just thought I'd share that with all of you guys because um it's gonna happen this year in spring because there's no inventory and prices are still going up. People still need homes. It's most likely gonna happen. It might
yeah,
not be that crazy, or it might be crazier. I don't know, but I'm sharing this with you guys so that way you guys are prepared for it. Again, if you're prepared for what's coming
yeah,
and you know the game, you know the rules, then you just gotta play by the rules and you're gonna eventually win. Might take longer, but you will eventually come out on top. That's why we do this. That's why we share all these market analysis with all of you guys, all these updates with you guys, because we want you guys to win. We want you guys to
right,
know what you guys are up against. We want you guys to have a curve compared to like your competition. Like
right,
that's you need to be up to date with the trends right now in order to
right.
like beat your competition.
Right. So there's going to be the majority of sellers are going to be one, baby boomers who want to retire in another state because it's a lot cheaper for them to do that and they really could retire very comfortably. Two, investors who are like selling because they got their house for such a great deal that they're going to cash out and invest in another state that can give them a much higher ROI. Okay. And three, okay, people who unfortunately cannot afford their homes anymore. So property tax continue to go up. In the
Yep.
last few years, I'm getting more and more people are saying, Lisa, my monthly mortgage changed again. What's up? Because they
The
reassessed the property
tax.
tax again this year,
Hmm.
you guys. How often do they do that? That's on Uncle Sam. Has nothing to
Yep.
do with your lender or your loan officer or your realtor. Okay, guys? If Uncle
Unfortunately, yeah.
Sam sees that, hey, the market's doing great, let's go ahead and reevaluate everybody's houses and
Yep.
get some more money.
Yep.
And the more your house is worth, the more you're gonna want to insure it. So your insurance is gonna go up as well.
Hmm.
So lots of things happening. If all of a sudden all those people there's a more than a good amount of people who didn't really do the due diligence, that might happen because that's what happened in the last market. But I can't imagine that many to happen because the guidelines are so much more strict. But again, one of my observations is if you're enjoying your cushy virtual job, think about whether or not you are going to be replaceable and how many other jobs are going to be replaced, just like Amazon cashiers.
Another thing to piggyback right off of what Lisa just said, um, if Oh my God, I just got a brain fart.
It's okay. It happens.
Oh Lord, I just got a brain fart. Never mind. When if it comes back up, I'll share it again. But I'm gonna go through the comments, okay? From the top. Chang says, if you can buy, buy. Trying to predict the market is the wrong way to go at it. That is
Yep,
true.
that's very
Chang,
true, Tim.
I once heard from a very great guy. You don't wait to buy a home. You buy a home and then you wait.
Yes.
Think about that,
Very
guys.
wise. Very wise.
Um, Chai says, "Damn, Putin just went into Ukraine. What will you think is going to happen, man? I hope we don't have another war in our hands. That's all I
Well, that
gotta
could happen
say.
too. I forgot about that. I forgot about
I'm
that.
not gonna even talk about politics on this
Yeah.
show tonight. Yeah, but of course, if we go to war, it's not gonna be good. You
Yeah.
guys already know that. Everything's gonna go to crap. That's what I think.
Well, the stock market's not doing great either right now, guys.
Yep. Chang says, do you suggest I go back to my loan officer or the company that bought my loan for a refinance?
So it's a relationship based. If you're already asking that question, Chang, I'm gonna assume that you don't have that relationship with your loan officer. Okay. And therefore, shop around, do your due diligence, make sure that when they're refinancing you, and for those of you that have refinanced with me, I absolutely show you the options, how much you can save. And if you want to see if you put an extra $100, will that work for you? And a lot of times if you don't want to restart a 30-year loan and do a 25-year loan and see how much that would save you, you can do that too. And there's a lot of strategies that you could do. Okay. When you actually do a refinance, think about this. Okay. If you already had your loan for 5 years and then you restart it at 30 years and you're like, well, why would you want to restart it? Right. One, the payment's a lot lower. So if you know that your situation is a little bit iffy because your job may not be as stable as you think. So you're kind of preparing ahead of time. And then you just make those same payments. Make those same payments, okay? And it'll go to your principal. So say, for instance, if you do a 30-year loan and it's saving you $500 a month, right? You can afford that $500, but you're just preparing yourself in the event that something happens and money is tight. You have the option to make that lower payment. But if you don't want to, go ahead and continue with the 500. It goes straight into your principal instead of your interest. So you kind of like velocity bank it a little bit, to jumpstart that. So you got to play around with those numbers. Your loan officer should be able to play around with those numbers to give you the best scenario.
He's trying to refinance to buy a home.
Yeah. Why
Buy
wouldn't you?
another home.
I've done that several times for several people. It's a great time to do that. If you need to cash out, you can only cash out when you have good amount of equity in your house, guys.
Right.
So even if the interest rate is a little bit higher, so what? Take a look at the numbers, play around with it first, and strategically plan your investments so that it makes financial sense for you. Don't just say, hey, the interest rates are high. Okay, I'm going to go somewhere else. Do not
Right.
step over dollars to pick up pennies. Take a look at your situation. Everybody's different.
Yep. I like how you said that because that's a perfect segue to this comment right here. Hey, Jesus says, "Is it a bad time to buy a house right now in California?" And it depends.
Okay. So as a lender, I'm going to tell you, it's always bad when you can't afford it. It's always good when you have a cushion and you actually can't afford it. Because if you can't afford it and you have the cushion, you are not forced to sell in a bad market. You can hold on to it. Okay. And if the mortgage is very similar to what the rental market at right now, you absolutely can. Because what happens if you don't sell your house and you need to move? And if you move, the rent is the same of what you have it. Then you suck it up and you do what you got to do in order to keep your home in that situation if you're in that dire situation. But you, as a homeowner, you also have the option of renting out other rooms if you're that dire of a need, you guys. Okay? It's not
Options.
ideal. You may not like to live with strangers, but hey, I think it's a much better option than losing your home.
I like what Ching said earlier, right? He says if you can buy, then buy.
Yep.
And that right there speaks so clear and loud because to this question, if you own a home, if you bought a home and now you're the owner of that property, you have options. You can rent it out, you can Airbnb it, you can sell it because the market is doing so well and still come out on top. So like, but can you afford it? If you can't afford it, then don't buy it. That's why everything always goes back to it depends on your situation, because maybe it might not be a good time for you to buy because it's out of your budget, because maybe you need a 4+ bedroom house and you can only afford for X amount that can't really get you a 4 bedroom, then maybe you might need to wait or set up for something less. Everybody's situation is a little bit different. That's why it's important you do a budget sheet. Budget,
Oh
as
yeah,
long as you don't go over your budget, you're good. Okay.
right.
All right. Marlene says Lisa explained the lending process very well. Thank you.
Aw, thanks, Marlene.
Yeah, Lisa tends to do that. I don't know why. She tends to do that. I don't know why.
I get straight to the point, you guys. I know it's very easy to sell the rates. It's very, very easy to sell things that are really attractive. But at the end of the day, you guys are the one that's going to make the mortgage. You guys are going to be the one that's stretching your dollar and saying, okay, we're going to eat ramen again today for the umpteenth time because, you know, we just had to tire that blue. So this month
Yeah.
we're really, really super tight. I don't want you guys to do that. I want you guys to enjoy your life. I didn't do that when I was younger. So I wish that I did. My kids are super grown right now and they're going to leave me. And, and I'm telling
Here's
you,
why. Here's why
somebody that,
that budget sheet is so
yeah,
important. The one that Lisa does, because like what's been going up for the past couple of years, homeowners has been seeing their mortgage going up because of taxes and insurance. If you did
yeah,
not budget, guess what? You're losing money the moment that the property gets reassessed,
yeah, yeah.
right?
Mm-hmm, mm-hmm.
Like that happened after you bought a home though, because you didn't know what was going to happen. But that's why as long as you remain within your budget and you're coming out on top every month after paying all your obligations, then
Yeah.
you'll be good. But if you're stretching it so thin to where you're living paycheck to paycheck and then the tax gets reassessed and it goes up and your insurance now gets reassessed, oh man, you're going to be stressing.
Mm-hmm.
So that's why it's so important. All right, next. Eve says, this for Lisa. If we spend money during this 30-day period, does it affect our eligibility for our pre-approval? We don't plan to spend too much, just a few days away to relax.
What do you
So a
mean by
getaway.
spending? What do you mean by spending though? Because are we talking about cars? Anything that you spend that's on your credit, that's going to show up on your credit report. Let's just say you buy a brand new $50,000 car. Your monthly payments are $500 a month. That absolutely can affect your buying power. Okay, so got to be really careful about that. Now, if you're like, oh, but I got the money, I'm going to pay it in cash. Good job. Awesome.
Yep.
However, just keep in mind that if that's the money that you were going to set aside for a little cushion of a house or anything, it doesn't matter, okay? Not just a car, but just anything, then you might want to hold off just a little bit so that you still have a little bit of a cushion. Now, if you're going to go on a vacation and just be relaxed so that you can come back with a mindset, I'm a true advocate of, okay, think about your health first, think about your mental state first, think about all of that first, because money you guys can always make, houses you can always get, but your sanity, time with your family, you
That's so
can't.
important.
Okay,
That's so important. Yep.
you can never get that back. So do that, guys.
Yeah. And another thing too is, correct me if I'm wrong, Lisa. Don't put any big lump sums into your account or deposit any big lump sums into your account because that will need to be seasoned. Am I right, Lisa?
Okay, so yes, it has to be seasoned, but y'all not supposed to know that. Just so that you know, okay? The reason being is that the banks do monitor money laundering and all sorts of stuff, all activities and stuff like that. So if you have, especially in Asian cultures where 50, 100, $1 million of
Whoop, it's
mattresses,
under the carpet.
it's normal. I get it. I totally get it, but
Till this day, my mom still rather not use an ATM debit account.
I
She would
know
rather
it's
just
very
bring out
common,
the cash.
very common, very common. So yeah.
There you go. Marlene says, I'm actually a new realtor and I'm interested in learning the lending side because I want to make sure I send clients to a good lender who will do the best for them.
Oh,
That is why I learned enough to be dangerous on the lending side too, Marlene. Right, Lisa? I asked
Oh
you a
yeah,
lot of questions, huh?
absolutely. Oh, absolutely. I think in order for a lender to be good at their job, they have to understand the real estate side and vice
Vice
versa. You
versa.
have to know enough to be a good team player, okay?
Yeah.
Because when you guys go out there, you're going to have two advocates. Chia is my eyes and ears, and he tells me, okay, how much do you think this house is really truly worth, Chia? And I come back, okay, they can push their debt to income ratio to this much, but they're not going to have more than $10,000 if the appraisal doesn't come back. So we either
Yep.
take the gamble, play the chance, and hopefully we get lucky. And Chia and I, we're so blessed. I'm gonna tell you, we get lucky more times than not.
Yeah. Hmm.
And Chia, I don't know if you guys see this. He's a super duper nice guy on this show. He's a bulldog when it comes to negotiating. I don't think I've seen anybody that negotiates the way this guy does. I have to come back and I'm the one that always asks him, it's like, okay, is there closing cost credit on this one? Because I'm preparing loan docs here to make sure that we get the right ones out. So I'm very, very super proud of Chia. He's like family to me. And you know, I'd super buy a house for him. I would trust him with that for sure. 1,000%.
Yep. There you go. Well, welcome to the club of being an agent, Marlene. Good luck to you.
Congratulations.
Appreciate the no sugarcoating. Yep. Of
Yeah.
course. No
Yeah.
sugarcoating here.
Yeah.
DJ audio. Wow, the winner on that house must have been so happy. Yeah. For that showing.
Yes.
Must have been hella happy. Yeah.
Yeah.
Chase says, always make sure when you buy a home, make sure you already have an exit plan in case things might change in your life. That is true. That's why you always got to consider long term. No matter what you're doing, if you're buying a property, you always got to think of the exit strategy. Shoot, worst case scenario, if I lose my job or my spouse loses their job, what am I going to do? We'll rent it out. Shoot, we'll sell it. Like these things can happen to anybody. So like you always gotta make sure you have an exit plan. And the reason why Chang says that is because he's an investor. They always think about exit strategies. They're not gonna go in on a deal knowing that they're stuck and now they're gonna lose money and open up like a can of worms for themselves. The exit plan is so important. If you're a first-time home buyer and you're not thinking about exit plan too, you need to start thinking about that. Like that's why me and Lisa always say, with the way the market is right now, it's okay to buy something that's within your means because you can afford it. But use that as a stepping stone, as an exit plan to upgrade later down the road to your dream home. It's possible. Buy something small that you could definitely live in and be comfortable so that this crazy market could blow by. And then once it calms down, you've already gotten equity, sell it or rent it out and use that equity to down as a lump sum for your dream home.
Right. So
it's perfectly
here's
okay.
Another analogy for you guys. It actually, a smaller home, okay, is more likely to appreciate faster than the bigger ones, okay? Because more people can afford it. Yep. So when you come sell it and everything like that, it's going to be same situation, okay? Homes less than 500 right now, hotcakes. I mean, homes in general are selling like hotcakes, but super duper 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 hotcakes, like right off the burner type of thing.
There you go. Chang says, I love how honest you guys are. People really need to hear these things because so many agents and lenders that work together will just push their clients to buy anything and max out their purchase. Much love to you both. Thank you, Chang.
Thank you so much for that. We appreciate that.
We do because of people like you.
Absolutely.
So thanks for the kind words, man. Eva says, sounds good. We're planning on buying things via cash, debit card for vacation, plane tickets, hotels, etc. Good. Good.
You can buy it on your credit card, okay, Eva? You can absolutely buy it on your credit card, and if you're planning to pay it off, that's totally fine because you get points on your credit card. So I would do it.
Yep, that's what I would do too. Okay, last comment of the night. No credit pool purchase. There you go. Okay, well, thank you guys all. Right. We went way over. Hopefully you guys got a lot from tonight's episode. We will definitely be back once we have more updates for you guys. But thanks for the comments, everything that came in, all the engagement. Me and Lisa, we love all the engagement. You guys keep us going. Again, it's because of you guys that we do what we do. Okay, because of you. So we will see you guys next time. Chi Chi fams.